have a way to have the gold, not sell it, which I agree, you don't really want to sell the gold for more dollars. Yes, you have more dollars, but the dollars are worth less, literally. Um, but you're profiting from the gold in a way that's obvious and tangible. So we get different reactions from different people. There are people who just look at this and say, well, that makes sense. Why aren't there 100 companies doing what you're doing? Well, it's difficult. Other people are like, but what's the point? Who cares? And so you get all different kinds of reactions. The world is slowly turning. The world is coming more and more to our value proposition. They are, asking for gold yield by name. They are seeking it out. There's a lot more inbound calls. It's, I felt like a lone voice in the wilderness for a lot of years.
Good day, everybody. It's me, Steve Yang here, Natural Resource Stocks. I have with me Keith Weiner from Monetary Metals. Keith, great to have you back. How are you?
Hey, Steve, how are you? Good to be back. Thank you.
Great. Well, Keith, I want to ask you, I know that Monetary Metals is growing. I know that gold is, had quite the run for a bit, is ripped to new highs earlier this year and then pulled back. I don't know, maybe 30% or so. But, if you tune out the noise, did anything really change, or is this just part of a much bigger bull market? And how do you understand what's going on?
I mean, in the really broadest sense, nothing changed. Certainly in the short to intermediate term, what happened was credit got crunchier. Um, we have one, client who's a big commodities trader. It's not just metals, but everything, oil, nat gas, you name it. And they were planning on giving us a big chunk of gold, and then the war broke out. They got caught wrong-sided. Now, what does that mean? Well, if you're an energy trader, a lot of the bigger guys, I don't know if they own the tankers or if they just have long-term contracts on them, but they're not just paying, hey, I want you to go from here to here. They have this thing, the ship under control for a year or a decade or I don't know how long. So they were long, I believe it was Qatar oil delivery contracts,
Yeah.
and you have to send a ship to Qatar. And they were short Brent. So you have to send the ship to where the Brent, the terminals that take in oil for Brent in Europe. And, that was a trade that had a spread,
Hmm.
and, you made your money on that, and you keep repeating that. And then all of a sudden, you can't sail through the Straits of Hormuz. So
Yeah.
the thing that you were long, Qatar contracts, now is basically no bid. And nobody's going to
Yeah.
buy that because you can't get a ship to pick it up, and even if you could, you're going to just sit for who knows how long, but you're not going to be able to get through. The thing you're
Yeah.
short Brent is skyrocketing. So it's just a trade that's gone horribly wrong, and you really don't have any good choices. You really have to decide whether you want to. So you get margin calls, right? You have a brokerage account, and your broker is saying, "Hey, you're long this thing that is collapsing, put in a margin, and you're short this other thing that's skyrocketing, put in more margin." So you can either keep feeding and cash for margin, cash being king here,
Yeah.
cash is king, or you can try to close the position. So you're buying Brent when it's running away to the upside, trying to close that your short position, and then you're trying to find a buyer for your Qatar contract, if there are any, if that's not a complete no bid market. I don't know how it was in early March. But either way,
Yeah.
you at best choosing the less bad of two really bad, options. And they both require a lot of cash that just suck liquidity out of the company. And you go from thinking everything's great, you wake up the next morning and saying, holy bleep, what are we going to do? Where are we going to get the cash? And the margin calls are hitting and all the things are happening. And needless to say, they didn't buy gold to participate in our program. They're still interested. They still love us. Nothing's changed fundamentally. They
Yeah.
still don't want to work with us. They still believe in the gold story, but they got into a tight spot where they needed dollars to service, margin calls. And I think that either servicing margin calls or servicing other debt that suddenly became much harder to service suddenly created this liquidity crunch in dollars. That's what changed. Longer term, all the drivers of why Westerners don't trust the dollar and the U.S. government, Easterners, as I've said on your show before, if you're in India, you're not buying gold because of distrust of the dollar. You're buying
Yeah.
gold because of distrust of the rupee. If you're in Turkey, you're not buying. It's not distrust of the dollar. You'd love to get dollars, but it's hard and capital controls. It's
Hmm.
distrust of the lira, which could hyperinflate, at any moment. And a crisis like this could be a great opportunity for it to hyperinflate. If you're in China, it's distrust of the Chinese government and the yuan, um, and so on. And so all those drivers are there. Debt is spiraling. I mean, it was out of control even before 2008. I remember during the Bush
2008.
years
Yeah, yeah, yeah. It
when
was.
people were saying, "Oh my God, $400 billion deficit. This is insane. This is unsustainable. It's going to cause inflation and rising interest rates." The same story we have today, just repeated, regurgitated endlessly. And now here we are, probably 10x that. We're probably staring at pretty soon $4 trillion deficit, not 400 billion. 400 billion looks pretty quaint, almost looks
Hmm.
pretty good. Like, hey, that would be fiscal rectitude
Hmm.
to reduce it to only a mere 400 billion, right?
Right.
So, same story. It's gotten worse. So somebody said on Twitter today, I guess I should call it X, um, gold isn't obvious to everybody yet, or something like that. And I was like, what do you mean yet? I mean, if gold wasn't obvious to you after 2008, it ain't never going to be obvious. But,
How
bit
much
by
worse
bit,
does it need to get?
right. I mean, but bit by bit, it becomes more obvious and more bad things happen. And, whether it's, the U.S. government seizing Russian government owned, treasuries and whatever, each little event, each little crisis, shakes somebody's confidence somewhere. We
Yeah.
have a couple of shareholders who are, very much of the mainstream, very much not gold bugs. They're on board because we have a mutual friend who's a big fan of monetary metals, a shareholder, and he got his buddies to tip in, some small investments years ago. And, one of them just opened a monetary metals account and put in, a couple of kilos of gold. Um, what triggered that? I mean, I certainly don't push my shareholders to, hey, you have to open an account, you have to do that. I don't say you have to anything. I don't, sell like that. But whatever it was that happened, whether it was Iran, whether it was just looking at, European deficits, the U.S. deficit, I don't know. But something
Yeah.
clicked in his mind, and he decided to do it for whatever reason. And that's so the drivers are there, the fundamentals are there. Nothing's really changed. But in the meantime, obviously, trader psychology definitely broke. And arguably, even without the war, that was due for a breakage by the end of January. I mean, you look at the price of silver, what do we have, 125,
It's ridiculous.
$126, just under 130. That was clearly overdue for something. Then, but it could also be that there were some people who saw the war coming. I mean, a lot of people got blindsided about the war, but there were people who probably smelled something in the air. And maybe that's what began the selling. They figured this is not going to be good for the price of gold and silver. If they figured that in the middle of January, hey, congratulations, I salute you. You were absolutely correct. But whatever it was, sentiment broke down. And now everyone starts to think of 5,000 as a ceiling. I think they think of 4,000 as a floor. Um, I was at a gold event the other night, and one of the speakers said, so this was they were on a trading desk at a big bank, and they said that they have central banks that have put in bids somewhere under 4,100. I don't know whether that means 4,090 or 4,075 or 4,050, but somewhere in that range, there's some big central bank bids. That doesn't mean the price can't come crashing through that, but it means two things. One is, as long as those banks haven't had their fill, then every time the price dips down, there's a firm floor there, right?
Hmm.
And number two, when the news comes out, oh look, these central banks added, we'll have famous buyer fallacy all over again, right? That, oh, look at this bank, and I don't know if they didn't say which central banks it was, but one could guess, perhaps China, perhaps Turkey, perhaps not, perhaps some of the Arab central banks, who knows? Um, but everyone's going to say, see, the central banks are buying and blah 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 blah, and that's supportive. Well, it goes like this. In every market, there's a bid and an offer. And you can't understand the price action until you understand whether sellers hit the bid or whether buyers hit the offer. And in this case, it's hitting the bid. So yes, it's good. There's a bid there. Of course, gold is always like that. There's always a bid anyway. But there's a bid there, and that's just under 4,100. Great. But that doesn't mean the fact if those central banks accumulated X amount of tons, which I'm sure they did, and I'm sure that will eventually come out as data, and then that will circulate in gold bug communities as look, see, they bought. But yes, their bid was hit. It's not the same thing as them lifting all the offers, which at this
Yeah,
moment in time is not happening. And you can see the price action, obviously, is not happening.
Keith. Yeah. So you mentioned central banks, and we know that. First of all, I hear different things about the accuracy of the numbers being reported or underreported. Is there reason to suspect that countries like China are underreporting the amount of gold that they're buying? So that's my first question.
I certainly wouldn't trust any economic number. The way it works in China, like GDP, the way it works in China, is the central planner decides how much GDP is going to grow. And then that breaks down to every region, and all the regional governors are told how much GDP is going to grow. And the regional governors break it down by the cities. And then the city guys, like, what are you supposed to do? So then they gin up, okay, we'll do a bunch of lending to property developers or whatever. So first of all, GDP is a completely worse than misleading, worse than useless measure of economic activity. Because yes, if you create a bunch of credit and then you lend it to property developers and you lend it to buyers, you can gen up a whole bunch of GDP of people buying apartments that they don't plan to live in, and call it investment. But
Yeah.
GDP is centrally dictated. Now, that's the kind of place where when you're told, let's say you're the mayor of whatever city, and you're told that your GDP is going to grow by this percent, there's only one correct answer to that, which is sir, yes, sir. And so what happens if the GDP doesn't actually grow by that amount?
Hmm.
Because, maybe it doesn't for one of, I don't know, 10 billion reasons. So, they report that it did grow at that rate because to do so otherwise is career suicide. And you can get arrested on corruption charges, like all kinds of things, bad things are happening, in China in recent years anyway. So I wouldn't necessarily believe, I would definitely not believe any statistic that comes out of there. Everybody loves to criticize the US. That's because there's the most data and it's by far the most transparent. And I've got friends who work in the, Bureau of Economic Analysis, Bureau of Labor Statistics as economists. And they take pride in their work and whether or not GDP is measuring the right things, as GDP is defined, they're measuring it correctly and they take real pride in that. And there's a ton of transparency over that. That's not going to be just a bunch of fictitious, horse manure. China. So, but then the question is, are they underreporting or are they overreporting? I think that the Chinas and the Russias and other governments like that love to help stoke the gold bug fear that the dollar is going to collapse, the dollar is being rejected by the world, the rest of the world is repudiating dollars in favor of gold or whatever it is. They love that story and they help contribute to it. And
Yeah.
are they overreporting, underreporting? I don't know. Gold, and here's the other thing, right? Is gold right now, I believe, is moving east, and that happens from time to time. But there's times when it's not happening, and by the time the gold bug, community gets a hold of that story and circulates it, that it could have been that it was true, but it's not true anymore, and yet the story is still circulating. Um, so, it's intermittently true, and certainly true that the West doesn't really appreciate gold or get gold. I was interviewed by a reporter for Bloomberg India, and she asked me a bunch of questions. What are you doing there? And all this stuff, right? And then she said, "Can you help me and our audience understand the difference between how gold is perceived in America, where you're from, versus how gold is perceived in India?"
Hmm.
And I said, "Well, I said in India, everybody owns some amount of gold. I mean, even the guy getting paid $2 a day sweeping the street has some tiny little fleck of gold." And she said, "Yeah, yeah, yeah." I said, "In America, less than 1% of people own gold."
Was she
No,
shocked?
just like total denial. Just like if I just said,
Yeah.
"Oh yeah, well in America we don't need food, we just breathe air and we get our nutrition from the air," like just total like, no, there's no way, right? So I
Yeah.
said,
Yeah.
your response is exactly what I would expect if I was interviewed by one of your colleagues from Bloomberg US, and I said that in India, basically 100% of the people own gold, it would be the same exact. So
That's
the
a pretty good way
attitude
to
is
put it.
the attitude is different, and this goes
Yeah.
back many, many, many centuries. If you look all the way back to the origin of mercantilism, right? So I think either 1500s or 15th century. I'm not sure, and maybe even older than that, but that's when there started to be more writings about the mercantilism as a philosophy, national economic policy, etc. What they observed was that, and there was one of the mercantilists who wrote this. He said, India is a bottomless sink for gold. Gold goes in and never comes out to India.
Yeah.
Even 500 years ago, 600 years ago, this was true. And I suspect that was true 800 years ago, 1,000 years ago, 2,000 years ago. I suspect it's been true all along. That wasn't really new at that time, but Europeans were starting to study things like the economy and gold flows. Whereas before that, it was kind of the medieval period, and there wasn't exactly that kind of scholarship, going on, so they didn't observe what was happening. Now, what was happening in Europe was a market step up in trust and institutions. You had, increasing rule of law. A couple of centuries before that, you didn't dare get on the road because there'd be robber barons that would kill you. And so very little trade, if any, and anybody that had gold would hide it because if your neighbors knew they had it, they'd come and kill you for it. And, it started to restore a normal civil society, and there started to be, trust and institutions and banking to some degree, not as we would recognize it today, but, something. And so when there's banking and when there's a financial system of some sort, there's less need for cash. And, gold coins or cash or silver coins. There's less need for cash because the financial instrument is more efficient. It does a lot more for you. It works. You can deposit something over here, go to another city, draw on a letter of credit, or whatever. So they just didn't need as much cash. And so essentially India outbid the Europeans. The Europeans didn't value it as much. They didn't need it. Now the mercantilists didn't
Yeah.
understand that. They focused only on the gold flows. The gold is going from here to there. Therefore, they're getting rich at our expense. And therefore, we have to devise all kinds of, cockamamie policies to somehow try to reverse this, which don't never work. Um, but the point being that if you don't trust your neighbor, you don't trust your government, you don't trust institutions, you don't trust the rule of law, ultimately, it's a cashing society. And gold is the ultimate, cash. And so, lower trust, societies, and I don't think hopefully I'm not stepping on any toes to say India is a lower trust society versus the US or the UK or Canada. Um, there's much greater need, a bottomless need essentially for gold. The rupee just doesn't, most Americans think in terms of dollars. Pension funds around the world, and we've spoken to them, balance sheets are denominated in dollars in Asia, in Middle East, all kinds of places. Um,
Yeah.
if you're in the U.S. and you have dollars in your retirement account or whatever, the gold bugs are endlessly saying the worthless dollar, but it isn't worthless. It does lose value, but not that fast. And if you're investing in stocks and properties and all these other things, Americans trust that that'll keep them whole and get ahead of inflation and whatever. Not so in the rest of the world, and so the demand for gold is relentless. Now, at the moment, two drivers for gold are temporarily closed, right? So Turkey always has restrictions on imports and quotas and how much you can import. And in wake of the dollar liquidity crisis, they've ratcheted down those import quotas, so they allow less imports of gold because gold is a dollar market, right? So to buy gold, you have to sell lira to get dollars, and then trade the dollars for gold, and that puts selling pressure on the lira, which they're terrified of. In India, they did two things. They said, so Prime Minister Modi came out and he said, this is probably March or April. This is kind of in the middle of the first phase of the war. And he said, the country has to conserve its dollar, reserves, and therefore please conserve fuel, consider not driving to work, consider carpooling, consider mass transit, consider not using as much air conditioning, whatever. And also consider not buying gold, please, for the good of your country. And, I interpret that and Indian jewelers that we know, I've shared this, and they agreed this was right. As everyone is going to yes, yes, boss, yes, Mr. Prime Minister, sir, of course, we're not going to buy gold, and then they're going to turn around and buy gold. And so then the next shoe fell, and they increased the import tariff on gold from was it 5% I want to say, maybe 6%, anyway, up to 15%. So there's a massive penalty to buy gold in India right now. And so,
So, Keith, I want to ask about that. So, you have governments, like looks like they're taking some. I don't know if they're taking different approaches. I don't know. I don't think any government likes gold per se for other people except themselves. Is that a right way to think of it? Because I hear on one hand China wanting to add gold to the reserves. You have countries like Turkey and to a lesser extent India, looking to manage gold demand and influence gold flows and steer people towards other assets. I mean, what does that tell you? What's happening beneath the surface, and why are there different approaches? Or is there a nuance to that I don't quite understand?
I mean, in a certain sense, like take the U.S. or Canada, or the U.K., Europe, they don't really care about gold because they've destroyed its utility. So now it's just buy it, wait for the price to go up and sell it, and then they get you for capital gains tax. So who cares? Um, but places where the currency is managed and there's capital controls, and China's had capital controls since forever. I believe India has as well. These places have toilet paper currencies, and so the only way to keep the value of that currency up is basically make it impossible or illegal or both to sell it. If nobody can sell the currency, then you can print. Look what our currency is worth. It's stable or whatever, pseudo stable. Um, so they don't want their people to really buy gold as an alternative to the currency. But in India, that's just a way of life. Because if you tried to keep your life savings in rupees, you would be destroyed. I mean, the rupee goes down over long periods of time per annum. I think the number is 7 point something percent against the dollar. And obviously the dollar is going down. The stated intention of the dollar's managers is 2% per year, measured against consumer prices, which would be falling because of rising production efficiencies. So the dollar's going down at well over 2% a year, and this thing is going down over 7% a year against that. So it's kind of like stand at the top of the cliff and you throw over the edge two things. You throw a wooden board, like a 2x4, and then you throw a brick. And the brick, you only measure the progress of the brick against the 2x4, and the brick is falling 7% more than the 2x4. It's not like the 2x4 is stable. It's just that it has much greater ratio of surface area to mass, and therefore much greater air friction, and has a much lower terminal velocity than the brick. So that's the dollar versus the rupee. So you can't save in rupees. It just absolutely doesn't work that way, and nobody in India would even believe that it would. In the U.S., people believe that dollar is money and gold is a volatile commodity. And yes, you might make a lot of money if you bet on gold, but you also might lose a lot of money. And the volatility ensures that that's exactly what happens. Anybody who bought gold at $5,500 in January is now resenting it, resenting their friends who told them to buy it. You made me do this, you idiot, blah, 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 blah. You told me you can't lose, the dollar's
Yeah.
only going down, right? And now I just took a $1,500 loss. I'm out and done with this. I'm not betting on commodities again. I'm going to stick to what I know, which is stocks and properties. And not that they really know stocks or properties, but they think they know because they confuse, lucky timing with being smart. But
Right.
there it is.
So, in terms of governments, like India and Turkey trying to, put the brakes on gold, if you will, like we've seen in the past, even in our country, a gold recall, and wanted to see if you think that's even a possibility for the U.S. At some point in the future, and is that in the cards? You think
When you say recall, you mean 1933?
Roosevelt?
So 1933, the thing to keep in mind is that gold is the basis of the banks. So everything they owed to depositors was gold, and everything that was owed to the banks was gold. Bonds were denominated in gold deposit accounts. I mean, they called it dollar, but a dollar was a 20th of an ounce of gold. And so when there was a banking run, happening at that time because of imprudent expansion of credit in the 1920s, thanks to the newly created Federal Reserve, which juiced up a hell of a boom. That was a lot of fun while it happened, and then when it busted, it was a lot of pain. So you had to run on the banks. So people were not buying gold. It wasn't a purchase. You went to your depository institution and you say, "Give me my gold back. Here's your paper that was my receipts that I have gold with you." And so that forces the bank to sell assets, bonds, in order to meet the redemptions. Now, if the bank can't do that because the bond market is going no bid, then and the bank can't honor the redemption request, the bank is insolvent. And so banks were dropping like flies in 1932, 1933. So Roosevelt wanted to stop the run on the banks. And secondly, the banks that were succeeding in meeting the redemption request were doing so by selling bonds, which is causing bond prices to fall. And everyone should understand that bond price and interest rate are the inverse, they're seesaw. So if bond price is going down, interest rates are going up. And Roosevelt, was a Keynesian and had advice from Keynes, wanted to force interest rates down. So he wanted to get control of the interest rate and he wanted to stop the run on the banks because the banks are politically connected cronies. So I said, okay, let's confiscate the gold. It wasn't really primarily about grabbing the loot, although I'm sure that pleased him. I mean, he's definitely a socialist. So, looting the people, especially the rich people, I'm sure pleased him. But it was about getting control of the monetary system and the banking system. Today, gold has no role in the banking system. So it's literally moot. The reasons that occurred in 1933 do not exist today. It's inapplicable. That doesn't mean that governments can't seize this or that, the other thing. But today, the only purpose of it would be to loot the people. And if you want to loot them, it'd be far easier with fewer constitutional challenges, I might add, to loot the 401ks and the IRS. Because these are tax deferred accounts, and you have to meet all the rules in order to, on a going basis, in order to keep your tax deferral status. So if the government changed the rules and said, okay, well now, going forward as of 2027, January, you have to have these spiffy new government retirement bonds. 30% of your portfolio has to be a retirement bond in order to maintain the tax deferred status of your retirement account. Whether they just got 30% or 50% or whatever it is they
Yeah.
want to do. And there'll be no constitutional challenges because the Supreme Court has already said that Congress has given tax deferred status. Congress can control what is required to maintain tax deferred status. So it'd be easier, and you'd get a lot more loot that way.
That's how they
You,
get you. How they get you, Keith.
that's right. So, the amount of money in IRAs and 401ks is multiples of the amount of money
Yeah.
that Americans would have in gold. Um,
So,
so,
so you mentioned was it 1% or less than 1% of the Americans have possession of gold, and is it? I don't know if it's close to 100 or 99 or what the actual number is in like countries like India who have gold, and there's a wide discrepancy in terms of gold mindset. How does that affect how people understand monetary metals and what you do? Do you have an easier time explaining the concept and having a that makes intuitive sense and buy-in from a country like India regarding uh, interest in gold, yielding gold in gold, and is that a lot easier of a pathway?
um, it's different. So in the US, most people don't have it, but if you concentrate on those who do, um, the average American who has gold has quite a lot of it compared to, every Indian would have some, but wages are so incredibly low there. I mean, per capita GDP in India is, what was it, $3,000 a year? I mean, it's really poor. Minimum wage is $2 a day to $5 a day, depending on which province you're in. Um, so yeah, that guy has gold, but a tiny little fraction of a gram. It's milligrams of gold. So there's no practical way to sign that guy up as an account holder, and the juice isn't worth the squeeze. Um,
Yeah.
both on a sales perspective, compliance, AML. I mean, it's not practical. So whereas in the U.S. they may not understand it as well, but the people who do have gold, the thing about our proposition, we're not trying to sell people on why you should buy gold. That's a complicated, broad-ranging discussion of politics and libertarianism and trust in government and inflation and the Fed, and it's an intractable discussion, and everybody has their views, and you're not really going to change. It's hard. Our discussion is much simpler, which is if you have gold, isn't it better to get a yield versus paying for storage? And if the price of gold is stagnant for a long period of time, then those storage fees really get old fast. 10, 20 years later of paying those storage fees, you start to add it up and say, well, shit, I spent $30,000 in storage fees over the last 20 years, or whatever it adds up to. And if the gold price is skyrocketing, then you have a different dilemma, which is, okay, you bought gold, and you bought gold for the right reasons. You thought the dollar was headed down. So you bought gold
Yeah.
in 2005 or 2010 or who knows when, right? Price is much, much higher now. How do you profit from that? It was a smart decision, but how do you profit from it? Well, conventionally, the only thing you can do is sell your gold. Now, if you still think that the dollar is going to hell the same as you did 20 years ago, which is more true today than it was then, um, selling your gold may not be what you really want to do. And if you don't sell your gold, and most gold bugs will say never sell it, then you're giving up a whole bunch of liquidity and a whole bunch of wealth for something that will never avail you. You can't do anything with it.
Yeah.
And so if you're putting it to work getting 4%, now you have a way to have your cake and eat it too. You have a way to have the gold, not sell it, which I agree, you don't really want to sell the gold for more dollars. Yes, you have more dollars, but the dollars are worth less, literally. Um, but you're profiting from the gold in a way that's obvious and tangible. So we get different reactions from different people. There are people who just look at this and say, well, that makes sense. Why aren't there 100 companies doing what you're doing? Well, it's difficult. Other people are like, but what's the point? Who cares? And so you get all different kinds of reactions. The world is slowly turning. The world is coming more and more to our value proposition. They are, asking for gold yield by name. They are seeking it out. There's a lot more inbound calls. I felt like a lone voice in the wilderness for a lot of years, doing this. I mean, I started writing in
I get
2010,
it.
and I felt like a
Okay.
crazy guy with a keyboard, and I would just write something and I sent it off to some editors, and it didn't get published. And to see it now, it's like the world has changed. The world is much more receptive to the idea.
And yeah, why are people more receptive? Is it just the increasing uh, diminishing return on the purchasing power of the dollar that's become more and more apparent every time you go to the grocery store? The dollar buying less, costs keep rising, sort of thing. Um,
Yeah, I mean, I
and
think I think rising consumer prices is part of it, but I think there's sort of a general decline in trust in institutions, trust
Yeah,
in banks. The banks are pretty clearly, cronies of the government, and monetary policy, fiscal policy, which is obviously deeply connected. I can't imagine too many people are happy with it. I can't imagine other than academic PhD economists that can look at how it works and say, have you seen that meme? It's the cartoon dog sitting there at the table in the kitchen, and there's like the whole house is burning down, and there's flames everywhere, and the caption is "This is fine." I think
yeah,
you'd have to be a PhD in monetary economics to look at this system and say this is fine. And the deficits just keep exploding. Neither party has any, I mean, I was going to say any real interest. Neither party has expressed any lip service to reducing deficits at this point. It's just full on spend, spend, spend. Um, More and more, hey, we don't even have to tax, we can just borrow. And then with higher interest rates, the borrowing cost is up, so people get nervous about. There's a lot of different reasons to be, concerned about the monetary system. And whatever those reasons are, and each person may have his own. One of those reasons resonates more than others, but people start to say, "Well, what the hell is the alternative?" And it's not some other paper currency. I mean, if you're an American, you're really going to sell your dollars and buy euros or even Swiss francs. You read about the BRICS. Are you really going to go out and buy Brazilian reals and Russian rubles and South African rand and Indian rupees? No. What are you gonna do? You can buy gold. And so yes, for some people it is becoming obvious.
We talked about central banks. We talked about distrust in institutions. We have the Federal Reserve. I know that I don't think either one of us are crazy about its existence, but it's what we deal with. We've got another Fed meeting coming up next week, I think, and markets, typically obsess over every word that the Fed says. Do you think investors put too much weight on these meetings, or can Fed policy still meaningfully change the outlook for things like gold?
Gold, much less so. I mean, gold. One of the virtues of gold, it's like not really correlated to anything. And over short periods, gold can have a correlation or a negative correlation to interest rates or whatever. But over really long periods, it just isn't so. However, the investors that are obsessing, I call it Kremlin watching, because these guys go into a meeting, right, and they come out of the meeting and they're going to change your life in a good way or a bad way. And so yeah, everyone's biting their fingernails to the quick, waiting for the magic answer. Um, and right now, the mainstream consensus is they have to raise rates. But for people who look beneath the surface, there's a million and one reasons why that's not really going to work. Um, Now, on top of that, politically, Trump just appointed Warsh. We know Trump wants lower rates. I mean, he really pushed on Jay Powell to have lower rates to the point where he even initiated a criminal investigation as a way of twisting his arm, and Powell um, didn't go along. But does anybody really think that Warsh is a guy that's going to, start off in office by doing the exact opposite of what his, boss, hired him to do? I mean, just from that perspective, it doesn't make any sense. But um, before interest rates began to be hiked, was that 2022, I think, um, there was, the Bank for International Settlements used to put out a graph and update it every once in a while. It was a percentage of all debt out there, corporate debt, that was zombie. So a zombie corporation is a company whose profits are less than the interest expense. That is, they can't even pay the coupon, let alone amortize the principal. And they exist because of, really low interest rates and very forgiving credit markets, very permissive credit markets. Um, that number was almost 20% of all corporate debt extant was zombie debt before interest rates. This is when interest rates were zero. And then we hike
Oh,
interest rates to, 4 point something percent. And of course, junk bonds trade a spread to that, so they're paying, even more than that. And what percentage, it's not like companies suddenly became more profitable. So if you raise the margin, you just marginalize more companies. What percentage of corporate debt today is zombie? I have not seen an update of that graph in a very long time. Maybe it's out there, I just haven't seen it, but I don't think it's out there because I think it's a very embarrassing number, a very scary number. That if let's say 50%, I'm just making a wild guess here, I don't know, but let's say it was 50% of all corporate debt is zombie, then
yeah.
that's really suggestive that an awful lot of bondholders are going to get burned. So again, number one, what do you do? Well, you buy gold because then you're not going to get burned. But in terms of the direction of interest rates, unless you want to have 50% of all the corporate debt out there default, and all those corporations go into bankruptcy and layoffs and all the havoc that would cause, you're looking at fall. You have to lower rates in order to give them some relief from that. And so there's a lot of dynamics of why I think the rate's going to come down, not go up. But we'll have to see because this panel of technocrats has the power to set the rate. They're price fixers, right? So they have the right to fix the price wherever they want. If they say it's 10% tomorrow, then sir, yes, sir, it's 10%.
Keith, if you can tell us a little bit more about monetary metals for those who don't understand the concept, how investors can earn a yield on gold paid in gold, and why you believe that's superior than simply holding gold yourself or other alternatives out there.
So we pay interest on gold in gold. That's what we do. We do that principally by leasing the gold out. So there are jewelers, there are refiners, there are mints, there are recyclers. There's probably a dozen different verticals where they are obliged to have lots of inventory or work in progress of gold. Gold being $4,000 an ounce. And by the way, gold is incredibly heavy for its size. It's much, much, much heavier than it has any right to be. For anybody who's not picked up a bar of gold, a pure gold, I encourage you to go find a way to go do that just to see. It's much heavier than you think it is. So an ounce of gold is a lot smaller than you think it is. And so if you have any sizable amount of inventory, it's quite a lot of ounces. And then each ounce is quite a lot of dollars. It needs to be financed. So if you lease the gold, it's very simple. Now you don't own your inventory, you carry it, and it's the investors who own it, and you pay interest on it. If you borrow dollars to finance your inventory, then you have this price exposure, and so then you have to hedge, which means you have to short gold futures, and then if the gold price goes up, then your hedge blows up, you're getting margin calls. So we're offering a much simpler, much more user-friendly finance for everybody that deals in physical gold. Um, and we're offering a yield on gold to anybody that has it. Now, if you have gold and you don't have a yield, what do you have? Well, you're paying for storage. Or you have an implicit cost, which is the risk of theft or loss if you have it at home, because you can't insure it at home. Not bullion. Jewelry, yes, but not bars or coins. So, if you're paying, I think our average client's paying 75 basis points a year in storage cost. If you're paying 75 bips, it's much better to earn 4% or 400 bips than it is to pay 75. That doesn't require a huge amount of hand waving and fast talking, but the Fed and Bernanke and Yellen and Powell and Warsh and all that stuff. We've been around. We've been doing this for 10 years. Actually, we were founded in 2012, but the first lease was 2016. It's open to everybody. It's safe. It's secure. It's what everybody should be doing with the gold. And then you don't have to sell it to profit from it. So what if gold does go up to $7,000? Do you want dollars then? What if it goes to $10,000 an ounce? Do you want at what point do you want to be all in on the dollar and be a lender to the government? Never, right? So, but if you just hold your gold and you're not getting a yield on it, you never profit from it. It's like you take part of your salary and you put it aside and you never use it. It's not, it doesn't have any utility. So we're about bringing back the
Keith,
utility of
speaking
gold.
of you, sorry. So speaking of utility, I didn't mean to interrupt you. Speaking of
No,
utility, what do you say about people who say that they want the dollar, or an account to, because it's liquid? How quickly can monetary metals get your gold out? And if you did want to, I mean, and if you want to talk about the liquidity of it, and just how practical and the utilitarian the gold having gold really is, because is gold still money when you take it to some place that you need it? And if you can talk about that a little bit.
so gold is not a medium of exchange, clearly. I mean, in certain contexts, yes. Um, I called on a jewelry wholesaler in Dubai and was a little astonished to see this really big bolt cutter. I mean, this thing was, more than a meter long, probably weighed 20, 30 pounds. And I was like, wow, you must have some really high security steel bolts to cut. Haha, So no, we used it to cut kilo bars, gold. I was like, what? Oh yeah, well, the jewelers, when they buy the jewelry from us, they pay in gold. And so, the bill doesn't usually work out to be an exact integer number of bars, so you have to cut a bar to make change. And I was just like, okay, so first of all, I'm wrong, because I've been saying for many years the problem with a bigger bar is not practical. How do you make change? What are you going to do? Cut it? Har har. Well, yeah, so that's exactly what they do, is they cut it. And so I took a picture of the bolt cutter, and I took a picture, they had a bin of all the little offcuts of kilo bars. So yes, it is a medium of exchange in certain contexts, and much more in India and Turkey and places like that than certainly in the US. But that's not, when I use the word money, I don't mean medium of exchange, I mean money. Money is the most marketable commodity, which means the commodity of tightest bid-offer spread, and the commodity of greatest stocks to flows. Virtually all of the gold mined in 6,500 years of human history, at least, that we know of, is still in somebody's, still in human hands. It's not discarded. Nobody ever throws out gold with the trash. Um, it only wears very slowly, and when gold is lost, let's say somebody's buried with gold teeth, within a century or two or three, somebody will dig up the corpse to recycle the gold, from the skeleton. Um, so all that gold, if there's a ship that's wrecked, people are always scouring the bottoms of the oceans to find shipwrecks. So virtually all the gold is still in inventory somewhere, and which means that its marginal utility doesn't diminish. You think about water. Water is very important. Water is vital for life. If you're out in the desert outside of Phoenix in the summer, like right now, temperature could be 115 degrees. If you're marching around out there in the afternoon, that's going to be deadly very quickly.
Yeah.
So you're thirsting to death. So if you came across a guy selling jugs of water out of the back of his pickup truck, how much would you pay for the first liter of water? You'd empty your pocket, right? I mean,
Yeah.
anything you have. What would you pay for the second? Well, at least that's a spare to get me back to civilization. What would you pay the third, the fourth, the fifth, the sixth? At some point, zero. So the utility of the next liter of water is diminishing compared to the previous, and it's a very rapid curve that goes down to zero.
Yeah.
So we say the marginal utility of water falls to zero. And the reason why this is the water diamond paradox that was solved by Menger in 1873, why water doesn't have a high market price and diamonds do, is there's so much water that at the margin, the marginal use of water is a very low, hosing off the sidewalk or something like that. Um, so, um, uh, so gold has these characteristics: marginal utility that's not diminishing, the narrowest bid offer spread, the greatest stocks to flows. That's exactly how money would behave. You would expect that people would be happy to be paid more money, regardless of how much you already have. You don't say, "Oh no, I'm already rich. I don't want more money. Thanks." You do
Yeah.
say, "I'm not thirsty. I don't want any more water." You say, "My gas tank is full. I don't want any more fuel." You do
Yeah.
say, "My garage is full. I don't need any more cars." But you don't say, "My bank account's full. I don't need any more money." So gold is that commodity that is money, and the dollar is a highly marketable instrument, but it's a credit, not a commodity, and it's ultimately only as good as the full faith, as they say, of the credit of the United States government, which is diminishing because they're abusing it. They're
Yeah.
abusing their credit. They're abusing our faith in their credit, and I think that the abundance of the faith of the people in that credit is going to be tested. I don't think it's really there yet, but it will be.
Do I have another question about the accounts? I remember when I opened up a bank account as a kid. I did the same thing with my kids too. It's like we opened up a, a Bank of America account when they're little because just for practical reasons that for teaching stuff. I mean, interestingly enough, the person at the bank account was saying, "Hey, this is how it works. You put $1 in, and every year you're gonna make money." I'm like, "No, you ain't. You're not only gonna you're losing money." But keeping the money in the bank, and she laughed and she looked at me, looked at the kids, and smiles like, "You're right." Bank of America person said you're right. So when you put money into a monetary metals account, what's the yield? If you're going to talk a little bit about that, and secondly, if you do need the money, take the money out. I know you earn money, earn gold in gold, but if you needed to change it into cash, yeah, what's that process look like, and how quickly can that be done?
So we're paying 4%, and it's one of those things. We can talk forever about it, and some people get it right away, and some people don't really get it until they see an account statement after the first month, and the amount of gold they have went up. Oh, now I get it. It's a magical moment when the light goes
They
off.
get excited, don't they?
Yeah. Um, so when you lease your gold, a lease is a contract, typically 1 year. So during that 1 year, you can't say, "Well, I want my gold back." Um, but if it's not in a lease, you can just call us up or go into your portal and say, "Sell the gold," and it takes a few days. I mean, it's not. I don't want to compare us to a bank in terms of the speed of processing it. it takes a few days, but yeah, you can sell it on, it's a demand deposit at that point. You can sell it on very short notice or no notice, lock in the price, get the cash in a few days, and we also think that it's a very important part of our ethos that your account can be redeemed in gold. So if you deposit 10 ounces of gold, yes, you can liquidate that, and so you get 10 times $4,100 or whatever the gold price is. But you can also say, I want gold. Here's my home address. Mail me, and you pay the premium on whatever coins or bars you want, but you can take out 10 ounces of gold and receive it. And not everybody does that, and not every day, but it's important. That's what keeps the system, or in this case, that's what keeps a company. I mean, I don't want to say we'd be dishonest, but for this, that's not what the point I'm trying to make. But in
No.
any system, from the perspective of the clients, that's what keeps the system honest. Is that if you cheat, or you don't like the, people don't like the terms or whatever, they're going to take their gold out, which is what was happening in 1933. So they changed the banking system. It's not a gold banking system anymore. You can't take out the gold. If you
Yeah.
buy gold, now it's an exchange with a third party. Bank doesn't care. So right now I have gold and you have dollars, and then we do a trade, and now I have dollars and you have gold. Bank doesn't care. They just update the name on the database. The record of that dollar deposit is now, mine versus yours. But our accounts are redeemable in gold, so people can withdraw the gold if they want to.
One last question. Do you guys do retirement accounts? And then secondly, if you can just lastly tell us where we can find you.
So, second part of the question is easiest. It is monetary-metals with an s.com. And on Twitter or X, I am at Real Keith Weiner. That is KeithWeiner. There's lots of fraudsters out there with various misspellings of my name. Um, and no, I don't do Telegram. I don't sell crypto scams. Any of that is probably not the real Keith Weiner. Um, we so there's funny laws that govern IRAs, and we've uh, not been able to find a way to take IRA gold directly in monetary metals. However, we have a partner that can do that because to have gold in an IRA, there's a lot of restrictions on it. It's not going to work for our program. But you can, in a self-directed IRA, you can own any securities you want. So we have a partner that's selling securities that ultimately all the proceeds come to monetary metals. So we're going to be announcing something pretty soon, I think. So watch monetary metals, sign up for our news announcements and other things, and you'll see that announcement as soon as it hits. So we're pretty excited about it. There's a lot of people with gold in an IRA that would love to participate. We have to stay compliant. I don't agree with the law. That's pretty clear, but the law isn't really a matter of whether you agree with it or not. The law is a matter of whether you obey it or not.
Yeah.
And so it is what it is.
Well, Keith, thank you so much for being here. It's always fun connecting with you. For those listening, Keith Weiner here, Monetary Metals. Check out the website. Thanks, everybody.
Thank you.